so my buddy Jeff can get better entries. That's why we're doing this. I'm kidding. All right, so here are the rules, entry rules, okay? I even gave you a set of rules for entries, okay? So what you do is you wait for your setup or your the setup. Obviously, the pattern is inside the setup, right? So you wait for your setup pattern to form first, okay? Entries before the shift candle will immediately put you in profit with little to no drawdown. Entries after the shift candle will lock the pattern and give you a good directional bias for the session. A foot soldier, that means like a little, you know, like sometimes people just throw in, I don't know when you guys play poker or thing, you just kind of put some money in so you're engaged. So that's what the foot soldier is, just in case, all right? A foot soldier should be taken right after the shift candle bar closes, just in case price runs after the close. In other words, it does not do the pullback. Waiting for the 1/3 pullback on the full position will give you a discounted entry, okay? It's very good, especially if you take a scratch. All right, your scratch is going to be very minimal if you take a full position on a discounted entry. If the candle is more than 20 pips, you can wait for a 50% retrace. So sometimes if the candle is 30 pips, for example, I'll put in my full position at the 50% retrace and my foot soldiers on the 1/3 pullback. Okay? All right. So what candle patterns should I be looking for? These are very standard ones, right? Railroad tracks, a cord of wood, which is a double set of railroad tracks. All right, here the shooting star, the pins to the upside. These are your entry triggers, okay? You can enter these trades when you see these entry triggers, right? You don't have to wait for the shift candle. All right, evening star, here's the shooting star going the other direction, pin to the downside. And here's the morning star, right? Pins on the inside instead of the outside. All right, the minute this pattern entry trigger confirms and this candle closes, you can go. All right, and this is the evening star, where the pin is also to the inside but to the short side. So you can take it here. You don't have to wait for it to close below the 13. Okay, these are called second leg nameable patterns. Second leg nameable patterns. It has to be on the second leg. It cannot be on the first leg. Okay? So why are these candlestick patterns important? These candlestick patterns are all the entry triggers you need to see before taking a trade. These candlestick patterns will allow you to enter the trade before the shift candle. These candlestick patterns are also called the nameable second leg entry triggers. All right. If there are no nameable second leg, you wait for the shift candle to confirm, the market make a move. So you got to wait for the shift if you don't have a second leg nameable pattern. Okay. All right. So here is an example of a M pattern with a nameable second leg, right? So here's my first leg. It comes out of the box. 1, 2, 3 to the high, close below 13, back above. This is an evening star, right? Pin this to the downside. Evening star. You can go. You don't have to wait for it to close below the 13. All right. Is that a riskier entry? The answer is yes. It is a riskier entry. Okay, because you don't have a confirmed pattern. Okay. TDI looks perfect. You got a one leg out of the band, one leg in the band. It does confirm with TDI when that candle closes, doesn't have to close below 13, where you have RSI line below, signal line below the market baseline. Okay. Here is an example of a W with a nameable second leg. All right, same deal. Comes out of the box, 1, 2, 3 to the low, close above the 13, back below. This is the morning star, pin is to the inside. You can go. This happens to close above the 13. Okay. Also, out of the band, in the band. You always want an out of the band, in the band. Out of the band, in the band is ideal, and it's even better if the second leg happens to be a baseline bounce. Second leg baseline bounce, lights out. Okay. All right. So how can you get an even better entry? The answer is the high test and the low test candle. All right. So entries on the false move against a reversal pattern The reversal pattern means the anchor formation, which is the M to W pattern, right? So the entry is on the false move against the reversal pattern. So what does that mean? A false move against the reversal pattern. Remember, the false move happens at what? At the beginning of the week, beginning of the session, and even the beginning of a new candle. All right, so in a nutshell, right, the reversal anchor formation is the W. All right, so I'm looking for a reason to go long. Here's my reversal anchor. Now, the false move against the reversal pattern. The false move is what? That's the real move. The false move is going to come this way. Right? That's how the low test is created. They're going to induce you to go short first. So while they're doing this inducement, I'm taking the trade over here, going long. It's very counterintuitive. You want to be like, oh my God, it's dropping. I don't want to go long. That's when you're supposed. That's how you get your 1/3 pullback. That's how you get your discounted entry. Okay, so this move is the false move against the anchor. Think about it. They spent 6 hours creating this reversal pattern. They're not going to take it out in one candle. They're just not going to do it because their money is sitting down here. So they don't want to go take out that low, but they want to induce you to go short first before they go long. That's their job. Okay? All right, so getting a better entry after confirmation. Here's the high test. Okay, so here's my advanced M. Okay, I can clearly see that. Got one leg out of the band, one leg in the band, RSI line below, signal line below the market baseline. So that's an advanced M. This pin to the high, the high test, is coming back to the high. Remember, here's my anchor. Here's my false move against the reversal pattern. Okay, M's and W's are reversal patterns. Always remember that. This high test is the false move against the anchor. It took them 6 hours, 10 hours, 8 hours, whatever it is to set this up. They're not going to take it out with one candle. They're just not going to do it unless it's news. Okay, because their money is sitting up here. This trap volume here, they did not release the trap volume. So that means when they shift it, whatever volume is trapped, they're ready to go. Okay? Here's an example of a low test. So here's the W of the male. Closed above the 13, back below, back above. Okay, this one did not close above, this one did. This is a low test. This is the anchor. They just try to induce you to go short and then they're ready to go. That's the low test. Okay, the false move against the reversal pattern. So here's an example of a confirmed half a bat with a low test. I got a 50-200 cross. I'm looking for safety. I'm in level 1. They come out, they hit the stop. Close above 13, back below, back above. The distance from the second leg, railroad tracks, to the first leg is more than 10 pips. That's a half a bat. Here's an example of a shark fin. Hold the male. Okay? And here's my low test. They come down. Sometimes they come with a full candle, but they do not close below the 13. They will come, and then they'll just shift out of there. All right, the 1/3 pullback. Here's the confirmed M with a high test. So, male, they come out of the male, right? Asian box, 1, 2, 3 to the high, close below the 13, back above, back below. Half a back, why? The second leg is lower than the first leg by more than 10 pips. That means I got to take out the nadir, which it does right here. Pull down, close below the nadir, all right? So theoretically, now, of course, I won't take this trade, but again, for educational purposes, right, my entry is going to be here. But for educational purposes, all things being equal, I'm looking for a short, so I'm going to wait for the high test. I'm going to wait for them to pull back 1/3 of the shift candle so I can get my discount. The other way to look at it and think about it is, if you go to a store, okay, how many of you guys want to pay retail? Most of you guys want to pay a discount, want to get a discount on anything you get. Nobody wants to pay retail, right? Unless you're Lou. Lou wants retail, right? But everybody else wants a discount. So, hey, if you want a discount, you wait for them to do the high test and you get your discount. That's it. Think of it that way. All right? Lou. All right. I'm just making sure you're listening, man. Sagar needs a discount. There we go. All right, remember, sometimes price runs away without you, so that's why you need to put a foot soldier. Okay, remember in the rules part of it, you say you put in a foot the minute the shift candle closes, just in case it runs away without you. So here's an example of an AR move. They induce breakout traders. They come, they hit the stop, they close below. This is more than a 30-pip candle. Okay, they close below. Notice they did not pull back. They close and then poof, they're gone. If you put a foot soldier, at least you got something. If you didn't, you missed the move. You'd be screaming. Okay? You'd be cursing in languages you don't even know you speak, right? That's your move. It's better to get something in there than to chase it. So here's an example. Here's your blueberry, right? Here's the M of your blueberry. Ugly anchor, I won't touch it, right? 1350 cross, first pullback, ID safety, close below, comes back above. That's not a real shift candle, so I won't touch it. And then when it does a real shift candle, short. So you got a foot soldier in here, it did not pull back. Okay, no big deal, you hit your target. They induce breakout traders, they come back to the 0-0 line, bottom of the Asian box, the two railroad tracks. TDI confirms, shifts. Now you put a foot soldier just in case it runs, but this time it pulls back a third, and you grab your full position, and then you're off to the races again. The classic example of put the foot soldier. Okay. The market maker does the high test on the 1 hour chart. Same thing. Anchor. 1350 cross, first pullback. See the pin to the high? So you put in a foot, it pulls back, you got it full in here, and off to the races. All right, 1 hour 50-50 bounce. Remember, these discounted entries add up. Okay, classic M, close below 13, back above, back below. Second leg nameable pattern, a shooting star, pins to the upside, close below. Foot soldier, 1/3 pullback entry, boom, hit your target. 1350 cross, first pullback, 1 hour 50-50 bounce. Candle is too big. I'm not going to take a foot soldier. I'm not going to take a foot soldier here. I'm going to wait for the pullback. 50% is my full position. A third is my foot soldier. Only grab my foot soldier. It dropped. Okay? Follow the rules. I gave it to you, including entries now. All right? Awesome. All right, so this is the quote of the day. Wait for your setups. Okay? It's there every single day. You just got to know what you're looking for and where to find it. If I'm in level 1, I know what I'm looking for, and I know where to find it. All right, coming out of the Asian box, I know they're going to hit the stop high, roll over, and drop, or it's going to give me a 1 hour 50-50 bounce off the water, or they're going to give me M&W off the mail. That's all they got. I know what they're going to do. I know where to find it. When they present, they're getting beaten up if I'm there. Okay? This week, I know some of you guys are having challenges. The market, like Steve says, they change when the setups happen. Sometimes, last 2 weeks, perfect, London. They got crushed. This week, they moved it to the U.S. session. Actually, last week, they moved it to the U.S. session too. All right? The trades are happening in the U.S. If you're a U.S. trader, you better be there. This is your 2 weeks to shine. Okay? All right, Lou says it's a riskier entry. If you wait for the shift candle, you get a smaller stop if you take it before the shift candle. You are absolutely correct. If you wait for the shift, it's going to be more solid, but your stop loss is going to be larger. All right, if you take the trade off the high, you're going to take more scratches, and the other problem is if you're not going to be very high, if your accuracy is not very high because you're trading off the high, you're never going to be trade big. You're never able to trade big lots, which is ultimately the name of the game, is to trade big lots. Okay, the name of the game is to trade 10 lots, 20 lots, 50 lots. Okay, take 2 trades a day with 10 lots for 30 pips. That's the name of the game. All right? You got to remember, I come from an accounting background. I don't like risk. I try everything I can to minimize my risk and to take high probability trades. And that's why I sat down for years figuring out all the rules of every single kind of setups I can see easily. Like with my eyes closed, I can see these setups. Okay? And then most of them are 75 to 80% accurate. All right? So you play the odds, you trade the odds. Which entry can give you longer than 30 pips? A 4-hour 50-50 bounce, you can hold it longer. It's the time frame, not the entries. If I'm trading a 1-hour bounce trade or 1-hour M&W off the mail or 1-hour setup, I can hold it for longer. If I'm taking a 4-hour setup, I can even hold it even longer than that. Okay, so it depends. I trade across multiple time frames, so it doesn't. I'm not like tied to one time frame. Okay. All right.